Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities may witness some consolidation after session of gains. SGX Nifty indicates a negative start for the broader index, was down and out with loss of around 0.20%. US stocks slipped on recession fears stoked by weak earnings and soft economic data. A report showed that US consumer confidence fell to a 9-month low in April, while a steep sell-off in first three public shares reignites fears over the entire banking sector in the US. So that also was something that weighed on the sentiment overnight for the Wall Street. Asian shares trade mostly lower after getting a negative handover at the Wall Street. And if you talk about the FII's data, they've gone back to the trajectory, the selling streak where they've sold shares worth around 407 odd crore, and DIIs, they've bought shares worth around 563 odd crore. In bunch of stocks that we'll be tracking this morning, and of course we'll be covering up the entire updates around the earnings would be Maruti Suzuki, Bajaj Finance, HDFC Life Insurance, Indus Towers, SBI Life Insurance Company, L&T Technology, KPIT Technologies, UTI Asset Management and Voltas. These will be in the focus ahead of quarterly earnings. Tata Consumers Products along with Bajaj Auto both have delivered a beat. So do keep an eye out on this one as well. But we're going to be quickly addressing in first what has happened overall in terms of the earnings out there. Bajaj Auto, Maruti Suzuki, Dalmia Bharat, Tata Consumer Products. These are some stocks which we'll be discussing today. Let's talk about Bajaj Auto first, which has delivered an operational beat out there. Just going to be assessing in, just giving a lowdown of how the numbers look like. Net profitability down by 2%. Talk about the revenues, it's gained by 11.7% year-on-year basis. And EBITDA, that's where the beat has come in, right? 25% uptick. Operational performance has been strong at 1,716 odd crore in this quarter. Margins, however, are at 19.3%. They've expanded as compared to 17% in the corresponding quarter of the previous year. What Jefferies has to say, it says it's a strong Q4 in tough times, maintains the buy rating, raises the target price of 5,100 rupees from 4,800 rupees earlier. Right now, the stock is quoting around that 4,400 odd levels, and it's a significant upside from the current levels. It's also raised the FY 24-25 EPS estimate by 4 to 5 odd %. What Motilal Oswal has to say, strong product mix has driven all-round beat. If you talk about the EBITDA margin, like I indicated, it's the strongest that we have at least in 9 quarters. So we are looking at strong operational numbers coming in from Bajaj Auto. Do remember the fact, strong set of numbers even from Bajaj Auto, and we'll wait to see how Maruti Suzuki does today because it's going to be coming out with numbers. It's a good season overall for the IT basket. 3 catalysts which Motilal Oswal thinks about the growth for Bajaj Auto includes the EV ramp-up, the product launch, and the recovery in the export markets. So that's 3 catalysts right now moving in the favor of Bajaj Auto. Tata Consumer Products is another one on our list right now. It's delivered all-round beat, good performance across the sector. Talk about the Indian business, the international business, they've done splendidly well. FY23 new launches at 2x of FY22. Starbucks crosses 1,000 crore of revenue for the year. And do remember the fact that stock jumped 5% ahead of the results on a Monday. Now, if you talk about the poll versus the actual numbers first. Revenue at 3,619 crore for Tata Consumer Products as compared to an estimate of number of around 3,500 crore. EBITDA at 511 crore as compared to the poll of 472 crore. So you can see the beat coming in on the revenue, on the operational front, and also, so to speak, about the margins. It's coming at 14.1% as compared to expectation of 13.4% out there. Profitability too seems to be encouraging at this point of time. 345 odd crore as compared to the poll of 265 odd crore. So we are looking at good set of numbers coming out of Tata Consumer Products as well. A bit of disappointment is kept in from Dalmia Bharat. Now, this particular counter kickstarts the earnings season for cement sector. Overall, it's usually ACC, Ambuja, which kickstarted the season, but this time around it's Dalmia Bharat. At least on the face of it, the numbers don't look that encouraging, but commentary is positive. So remains to be seen how this one reacts. There's this entire thing going on with the capex expansion, so to say, for the cement sector overall. It's right now, the cost pressures are ebbing, but price hikes aren't really coming through. So that's the pain point for the pocket out there. But for Dalmia Bharat, if you talk about the earnings out there, revenue at 3,912 odd crore versus the poll of around 3,844 odd crore. Volumes came in at 7.4 million ton as compared to the expectation of 7.25 million ton. EBITDA, a little disappointment there, right? 707 odd crore as compared to the estimation or the expectation of a number of around 790 odd crore. So that's the miss coming in on the operational performance of the company. Margins at 18% as compared to the expectation of 20 odd percent. So PAT at 608 crore as compared to the poll of 300 crore. Now that's a significant miss coming in on the bottom line performance. It's because of the one-off item on the bottom line. Overall, higher raw material cost has hurt despite the lower power and fuel cost. But we have Rajesh Palviya from Axis Securities joining us to take us through the technical side of the game right now. And let's talk about Nifty there. Do you expect some consolidation to finally come through? We've been ignoring the global cues, and this time around also the global cues aren't really very supportive, but earnings are. What's the strategy right now and the immediate support and resistance level?
Yeah, good morning, Nikki. So very strong setup for our market. Nifty is holding above 17,700, and we have seen, again in the previous session, short covering was there, and most of the stocks from the derivative space have witnessed this kind of activity of short covering. And looking at the broader market, again, market breadth has improved significantly. And looking at the overall setup for this series, as we are moving to the expiry of this series and looking at the data setup, we believe that this momentum is likely to continue further, as there is no disappointment from the earnings which the companies are posting. So we believe that confidence is again coming back to the street, and buyers are again coming back to the market, and they are buying and holding the stocks. So we believe that this momentum is likely to continue once Nifty manages to cross about 17,800 level. Then another round of short covering we can expect, as throughout the series, most of the call writers were aggressive at 17,800. So they have to cover their position. And looking at the data for 4th May, next weekly series also, that short covering was there for the call writers, those who have sold the position for 17,700, 750 zone in the previous session also. So we believe that this momentum is likely to continue. On the breakout of 17,800, we are projecting target of 18,000. Buy on dips should be your strategy. Your stop losses at the current juncture should be around 17,600. So till we are holding this level, any dip towards 17,700, 650 are the buying opportunity for Nifty.
All right, it's the buying opportunity for Nifty, but what do you think of Bank Nifty? Do you think it remains in the strong buy mode as it continues to make higher highs and higher lows for the second straight day, at least when it came to the yesterday strategy? What do you make out of it and the immediate support and resistance level out there?
So very strong setup for Bank Nifty also, and as Bank Nifty almost tested the level of 42,800 in the previous trading session, which is the immediate resistance area for the Bank Nifty looking at the call concentration data. But we believe the kind of buying action which we are seeing in the private as well as the PSU bank, we are hopeful that Bank Nifty may manage to give breakout above 42,800, and once this breakout happens, then Bank Nifty can scale up further higher towards 43,200, 43,400 in the continuation of this uptrend. So again, in the Bank Nifty also, we are holding our buy on dips kind of strategy. Till Bank Nifty is holding above 42,400 mark, it's a setup to go to remain on the long side trade. The PSU as well as the private bank both are showing good strength, and most of the large cap banks are trading about their near term breakout level. So we believe that this momentum is likely to continue for the Bank Nifty also on the upward side.
All right. Today is also the mid-cap expiry out there. So what's the strategy with that, Rajesh?
So we believe that Nifty mid-cap is also in the bullish zone. Most of the mid-cap stocks are contributing to this up move. And looking at the overall setup for Nifty mid-cap, we believe that this momentum can extend further as the broader market breadth is also improving. So looking at the overall setup, we believe that 30,500 is the immediate support area for Nifty mid-cap. Until Nifty mid-caps are holding this level, trend is likely to remain on the bullish side. Once in Nifty midcap able to cross about 31,350 level, then possibly this rally can extend towards 31,650 to 31,800 also.
All right, Rajesh, I would also like to chat a little bit about the entire FMCG basket out there. It's not trading far away from the 52 weeks high, right? So once it hits that spot, do you think it's only expected to go further? What's your assessment? And from the entire space, what do you like?
Yeah, so FMCG space is looking very attractive. Most of the stocks have recovered from their recent low. The stocks which were like Asian Paint, Bajaj Paint, and other stock like Britannia, most of the stocks have recovered from their recent low. And looking at the near-term, short-term setup, we believe that this FMCG space can further move higher from the current level. From that space, from trading perspective, we are bullish on Marico. Very strong breakout has been there in the previous trading session. And looking at the overall setup for Marico, we believe that this stock can scale up further higher from the current level. As stock was in corrective move and stock managed to give breakout of its falling channel on the weekly chart. We are projecting target of 525 to 530 in the continuation of this pullback. One can buy Marico with stop loss of 475. The second stock which we like is Asian Paint. Stock was in downtrend, but looking at the overall setup, looking at the recovery from the recent low, we believe that Asian Paint can move further higher from the current level. 3,000 could be the possible target in the short term. One can buy Asian Paint also with a stop loss of 28.40. Another stock which we like from this FMCG pack, that is Titan. Titan is in uptrend, and continuously we are seeing that stock is forming higher top higher bottom formation. And looking at the overall setup, we believe that once Titan manages to cross about 2660 level, then this rally can extend toward 2740 2760 zone. So Titan is also looking bullish. One can buy this stock with stop loss of 2590.
Right, Marico, Titan are some of the stocks that Rajesh has recommended this morning. Also, in terms of the mid-cap IT space, before we address the market opening out for you, which mid-cap stock you like the most? KPIT is expected to come with numbers today. Most of the companies that have mid-cap IT companies that have reported numbers thus far have been an encouraging set of numbers, be it in the like of Mastech, be it in the like of Cyient. Anything that you like from that space?
Yeah, so mid-cap IT is looking one notch better than large cap IT, and most of the mid-cap stocks have recovered significantly from their recent low. So we believe that Coforge is looking very attractive. Looking at the near-term setup, we believe that Coforge can scale up further higher from the current level as the stock is holding above 3,900 level. So if it continues to trade, could be around 4,050 to 4.
Sure, yeah. Rajesh. We'll address the market opening first and come back to you and discuss further about Coforge out there. Nifty 50 right now has been a shadow of consolidation creeping into the markets. Finally, 17,750 mark. Somewhat flattish undertone with negative bias out there. We were looking at some amount of consolidation creeping into the markets. But the good news is it's not really ignoring the global cues. The bad news is that it's ignoring the good earnings that have come thus far. Bank Nifty index, let's address that for you just to see if the support has been lent by Bank Nifty index overall. Bank Nifty index, just to see, right now has been trading down and out with losses of around 0.2% out there. 42,500 mark has been held on to. But then the entire index right now is down and out with 0.2% of a loss out there. In terms of other sectoral indices that we have on the list right now, be it in the likes of realty, be it likes of the pharma, just to see how the broad favor. Metal, it's down and out. 0.5% of loss coming in for the index right now. And in terms of the other sectoral indices that we have, Nifty IT trading in green, 0.2% of gain coming in for that one. So KPIT Technologies would be reporting in the numbers. Do keep an eye out on that one. Auto shining bright for you, 0.1% of gains coming in on that one. Bajaj Auto delivered good set of numbers. Maruti Suzuki would be coming up with numbers today. FMCG index overall is trading flat with some amount of positive bias out there. In terms of the other sectoral indices that we have, Pharma Index flat with negative bias despite most of the stocks trading in and around their 52, that's for FMCG, beg your pardon. Pharma Index at this point of time is trading flat with negative bias out there. In terms of the other sectoral indices, Realty Index, 0.3% of gains coming in on that one, holding up for you with a couple of sessions that the particular counter Realty is doing well. Infra, a bit of negative bias creeping in even on that one. In terms of the market breadth, advances to an extent of 30 and declines 20. So we are looking market breadth right now, which is in the favor of advances, and Nifty 50 right now. It's recouping some of the early losses, but nevertheless, there's this flattish trend out there with negative bias. So it's nothing sort of opening coming in for the markets. But let's also look at the top gainers and the top losers that we have on our list right there on your screen. In terms of the top gainers that we have, TCS, Eicher Motor and Nestle India. After reporting the revenue, which was at a 10-year high, Nestle India has made up to the list of top Nifty gainers out there. Infosys, Bharti Airtel and Hero MotoCorp. So it's clearly also the auto counters along with FMCG which have done well. Remember, Rajesh was talking about Titan being attractive at this point of time, shining bright for you. Tech Mahindra has also done well. So do keep an eye out on the bunch of IT names out there. Metal Index have made it on the, in the list of laggards out there. Hindalco, Bajaj Auto, Tata Consumer Products. Now, do remember the fact that Tata Consumer Products has delivered good set of numbers, but the stock ran up substantially ahead of the numbers, giving an indication that much of the earnings were factored into the stocks. So probably a bit of profit taking on Tata Consumer Products out there. Adani Ports, HDFC Bank and BPCL. These are some of the other losers that we have overall on the list out there. But we could also look at KPIT Technologies just to see how the stock has been doing. Mid-cap IT space overall has done well for you. And it remains to be seen how KPIT will perform. It's going to be coming up with the numbers in today's session. But overall, if you talk about the mid-cap IT trend for you, that's held up as compared to the larger counterparts. Up and about with gains of over of 1% out there. So we are looking at some amount of positive momentum building in for KPIT ahead of the numbers. Also, you had something in the likes of Nestle India, which is doing well. One of the top gainers out there in the list. Bajaj Auto too, for that matter. Maruti Suzuki, let's pull that up. It's going to be reporting in the numbers today. At this point of time, Bajaj Auto is down and out with losses of around 1%. Now, do remember, operationally, it was a strong quarter coming in for Bajaj Auto. It was almost at a 9-quarter high operational performance, but much of it is actually factored into the stock prices. Even if most of the results are positive, you've seen a significant run-up coming in on the auto counters right there. And Bajaj Auto is no exception to that. Maruti Suzuki is something that we need to keep a close eye out on because it's going to be coming up with numbers today. And, we're expecting some sort of numbers, a good set of number coming in overall for Maruti Suzuki. But it remains to be seen whether it will be able to deliver that kind of numbers. Revenue, I'm just, giving up the expectations out there. Revenue up is expected to be higher by 23%. EBITDA is expected to be higher by 45% for Maruti Suzuki on year-on-year basis. Operating margin is expected to be at 10.7% as compared to 9.1% for this counter. Profitability is expected to shoot up by more than 50% for Maruti Suzuki. Now, things that really need to be watched out for Maruti Suzuki will first include the like of a volume figure out there. How does the volume figure behave? So, volume growth is expected to be around that 5.4%. So, 5% year-on-year growth is something that we're expecting out of Maruti Suzuki, and revenue growth at 23% is expected to be led by both the volume and the price hike or the price increases that have come through the quarter. So it's a combination of both volume as well as price. Realization is expected to be higher, 16% sequentially, beg your pardon, year on year, due to the price hike which has been taken. In terms of the margin, it's expected to increase by 160 basis points. Now, three things for the margin expansion out there. A, operating leverage, favorable product mix, and price hikes. These are the three factors which are expected to, lead to a favorable operating margin profile coming in for Maruti Suzuki. Remains to be seen how does the stock really do after the earnings. At this point of time, it's really flattest trend out there for Maruti Suzuki. But Rajesh, come in on this one. What do you make out of Maruti Suzuki at this point of time? Do the charts look attractive?
So ahead of number, we believe that it's a very sideways kind of data setup for Maruti Suzuki. Once a stock crosses above 8600, then there could be a breakout trade can play out for Maruti Suzuki. At this moment, 8350 is the key level to watch for. If that level is intact post earning, then possibly stock can show some bit of pullback. But looking at the near-term, short-term setup, we believe that some consolidation action is happening. So the market participants are going to wait for this breakout. 8600 is the key level to watch for on the higher side. So that breakout can trigger furthermore fresh buying action in the stock prices.
All right, so that's the word coming in on Maruti Suzuki. But for Nestle India, like we discussed, and also one of your recommendations that you were talking about, Titan, is one of the top gainers that we have on the list. Despite the up move, do you still think it's a buying opportunity for Titan out there?
Yeah, still a very strong set of chart structure on the weekly, daily time frame, and looking at the overall setup for this series also, we believe that this momentum can carry forward for next series also, and 2750, 2800 could be the possible target. So one can buy at the current level also. If any minor dips comes, one can add also. Keep stop loss of 2580 to remain long on the Titan.
Rajesh, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. It's that point of the day where we address the fundamental story for you. Enough and more is happening. Talk about the FMCG basket, talk about the IT sector. Overall, we are looking at some amount of strong set of earnings coming in for the markets. Now, do bear in mind the fact that Nifty made a high of around 18,600 in October 2021, and the EPS at that time was around 650. 18 months from now, Nifty is 1,000 points lower, but the EPS is higher at 856, which implies that there is overall a 30% growth in the earnings, but still the markets are down by 5%. Markets seem to be more attractive, should be more attractive when the earnings grow up, but it's actually witnessed consolidation, or rather, correction out there. But on that note, let's bring in our guest, Anil, Rego, founder and CEO at Right Horizons, right for you, just to understand what's happening exactly with the markets right now. Anil, I was just comparing the data, October 21 EPS with the EPS right now, and markets still correcting significantly, even if the earnings look attractive. Do you think this quarter would be any different? We expect strong set of numbers coming in from some of the players, at least rate sensitives, but still that will not percolate down in terms of for the market bullishness. What do you make out of it right now?
Yeah, definitely. So first of all, if you look at the overall valuations, and what people don't realize is while maybe this index has not corrected as much as, say, some of the, let's say, a NASDAQ in the US and stuff like that, right? But on the other hand, even just staying where it is or going down marginally in that period, while you have earnings growth, in some form, there's a valuation, improvement that happens, and it becomes a lot cheaper for you, like you said, that 30%, right? So that's sort of a different way of looking at it, and most investors, get caught in all the noise. So that makes it a lot more safer for the Indian markets. Yes, and one expects the momentum to sort of maintain and continue. Yes, there was that little bit of burst of, let's say, growth that you saw after COVID, where people ended up, spending for some areas which, they had held back for some time. So some of those are gone, and I think now probably see a little bit of a secular and normal growth that sort of comes in, and And one is optimistic that also from where interest rates are, we think that, they are sort of peaking out. Okay. And so from there, hopefully from here, we will see, some bit of easing as well, as you go forward. So I'm confident that from a consumer standpoint as well, there should be growth coming in, and sectors like auto definitely are ones which can catch back.
All right, so autos are something which you think can play a catch-up out there, but Bajaj Autos delivered good set of numbers. Operationally, the performance was at 9-quarter high. Maruti Suzuki would be coming up with numbers today. Solid set of quarters expected. Volumes are expected to be higher overall for the entire auto space. What do you make out of it, and what's your expectation? Much of it has been priced in. Are the valuations attractive?
Yeah, so see, if we look at from the really long term, the period when they did well, the valuations were sort of much higher. Then we saw, a big lull that came in terms of growth and demand, and and we are coming out of that, and we saw good growth in the previous, say, 12, 18 months. So yes, so it's a bit of a pause that you see. The good part of it is, demand has been strong. You've had order backlogs that are coming, waiting periods, etc. Right. So I think that from that standpoint, definitely that's a bit of a positive. And especially, I think momentum will sort of continue with the consumer vehicle sector. The two-wheelers also should hopefully get some benefit, from the election year and the spending that happens out there. Okay, but still, I feel that the two-wheeler segment is ripe for disruption, and the entry barriers, thanks to electric vehicles, has come down substantially. So one should be very careful in terms of looking at companies which are strong in the EV space on the two-wheeler side. So all in all, I think the growth will sort of continue. I also think that the little bit of price hikes also should sort of come in. Their input costs in some form, which have been low for last few quarters, will also start probably inching up, as inflation also bottoms out. So from that standpoint, yes, there are going to be headwinds in terms of let's say higher costs, but I think it'll more or less get passed on to consumers. And there are also, of course, to keep in mind, there are various emission norms that are coming into play. There's also, EV safety regulations. So those could also bump up prices a little bit. And possibly automakers also have the excuse to increase prices while they do that. Sure. So I'm long-term bullish on the sector. Yeah.
Sure. I mean, Anil, we've already seen Maruti Suzuki going ahead and raising the prices of the entry-level SUV segment out there. So that's something, which has already taken place when it comes to the overall auto sector. But if I was just supposed to ask you in the pecking order, which of the stocks do you like given the valuation and the earning profile? And of course, I'd also want to chat about the cement space. But first, complete with what do you think about the auto space and the pecking order?
Yeah, so I like to avoid giving, stock-related tips out there. But I think from a broader perspective, some of the names you said, yes, consumer, definitely. I think where you have order backlogs and let's say there are price increases, I think you have the names that, you can figure out. And so those are the ones that I think will also sort of maintain. I think, the order backlog, I think, can be an interesting way of looking at it, because then you are able to sort of see where it is coming off, right? So the waiting period, for example, for vehicles. So that is something that I guess investors can look at and maintain it and, invest accordingly.
All right, Anil, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, with this, it's a wrap and goodbye from the entire team who puts this piece together, all out for you. Well, thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.